following presentation is for educational purposes only. All of the symbols, trading ideas, and live trading are for demonstrational purposes and are not recommendations or trading advice. Past performance may not be indicative of future results. All of the information and opinions expressed by third-party guests are their own and are not necessarily those of NinjaTrader LLC. Trading futures involve substantial risk and may not be suitable for everyone, and trading futures can result in losses greater than the initial required margin. Traders should only trade futures with risk capital. Risk capital is money that you can afford to lose without jeopardizing your financial security or current lifestyle. You can find additional disclosure information on the NinjaTrader website.
Good morning and welcome back to the NinjaTrader live stream. We have Develop Your Edge with Anthony Crudele today, special guest, but we'll bring on Anthony. How you doing, Anthony?
Tommy, I'm doing good. It's great to have Shy Girl here with us to talk commodities. I don't think I could talk commodities without her because we're going to do the macro backdrop. I'm going to look at the charts. I think it's a tag team made for this show today.
Yeah, I'm excited. Tracy, welcome to the show. This is your first time on NinjaTrader Live, and I followed you on X Twitter for a while now, so I'm really excited to have you on.
Well, thank you. It's nice to be here.
And so, Anthony, I'm just going to hand it over.
All right. Well, Shy, you and I have done this before a little bit in the past, just a couple of times. So I wanted to bring you on Develop Your Edge today because right now, everybody's talking about the macro side of things when it comes to what's happening in the environment. Everyone's always talking about the macro side of things, but it's really getting emphasized a lot about what's happening with rates and the dollar, and then how gold and copper and a lot of commodities are just often running to the upside. And it's kind of a unique time, Shy, where you have rates actually going up and you have gold going up, silver going up. And I think that I'd like to just start there and just maybe have you talk a little bit about why you think we're seeing this.
Well, I think that, gold and silver both have kind of been neglected for a very long time. And back in 2022, what we really saw when they started raising rates is we saw crude actually being used as sort of an inflation hedge. And what we've seen this year is, we've started to see a little bit of an uptick in inflation for, the last 4 months already. And so I think that's part of the reason. And I think that's part of the reason that you're seeing the dollar up as well as the precious metals up, because most people are used to that being somewhat one-to-one correlation, but that doesn't always hold true when there are other fundamental macro backdrop indicators involved, because I've seen a lot of people ask me that, why is the dollar going up and we have precious metals going up? I think it's part that it's an inflation hedge. And I think that, I think there was also a marked difference when we had that 180 turn with the Fed, with Powell in that December meeting, when all year he had been saying, higher for longer, higher for longer, higher for longer. And we saw that pivot in the messaging in that December meeting where they started talking about rate cuts. And that's when the market went berserk and factored in 6 rate cuts, which has now come back down to about 2.5. But that's really when we saw an uptick in gold too. And so maybe gold sniffing out, if they're telling us the economy is great, the economy is great, the economy is great, well then why are you tapering QT? Why are you talking about cutting rates? And so gold and, silver might be sniffing that out a little bit as well.
Yeah, it's a unique time because, gold, when you're looking at the U.S. Futures markets, it's gold in dollars, right? And so how often are you going to have rates going up with the dollar going up and then you have gold going up? It's not something we've seen historically, at least in my career, where I've seen something really, it's instead of the opposite correlation we're used to, it's actually correlating with it, which I think is so unique. And what I want to do is we'll start with gold. We'll pull up the charts because we're going to talk gold and silver today. For me, I always look at range expansion. I look at, is it range contraction? Is it mean reversion? And right now, when I look at gold, we see range expansion. I look at my Bollinger Bands here. We have a daily chart up here on Ninja, and I'm curious, Shai. I know that you look at the technicals as well, and maybe we touch base a little bit on the technicals alongside with what's happening in macro. Gold to me looks like it's not ready to slow down. It looks like it's going to continue to go higher. And what should we be watching going forward? Maybe some technical areas, but also some of the data points that you think could either fuel this fire a little bit more, or possibly maybe take some people out of the gold market if we see some data points that might suggest maybe this trade is done.
Well, I think actually, and many may disagree with me, but I actually think that if they actually do cut rates, that's going to rocket ship gold higher. And I know it doesn't make sense, but I think the markets are going to be worried. Why are you cutting rates if everything is so great? I think that worries the market. I think the gold market is telling us that right now. And so I do think that could go higher. So far, I mean, from the recent, fib extension, we just blew through the 161.8 fib extension, blew through it, right?
Yeah,
And so to me, that says that, this still can go a lot higher. I mean, we don't have the, it's very high up there, but the 261.8 is up at 2457. Now, I'm not sure it actually gets that high, but the way that it's blowing through all these fib extensions without looking back says to me there's a lot of momentum in this market. In addition, you have to remember this, when we started seeing gold start to really move, the market was very short. The market's always short gold, right? So I think a lot of that initial boost was shorts kind of getting squeezed out of the markets. And now if you look at CTAs versus gold, they're on the chase, right? Because they're chasing these, the Momo CTA traders are chasing this higher. And so right now, I just don't see, I don't see a reason for it to really stop at this very moment. And I'm not saying it's going up in a straight line. Obviously, nothing goes in a straight line. But we really I don't see a major catalyst here for it to put a halt to this trade immediately. Now, that can always change. Data always changes, unforeseen circumstances always change. But, and we also have geopolitical risk going on right now with Ukraine and, Israel and Iran. And I think gold markets are also sniffing that out as well. So we've got a lot of things, a lot of fundamental factors behind this trade, as well as, if you just look at price action, it's not stopping anytime soon.
No, as I mentioned, I always look at three different types of environments, and right now we're in range expansion. Anytime I see a top Bollinger Band on a daily, this is a 20-period 3 standard deviation, take out the previous Bollinger Band peak, and we have a higher high, and we're hugging a measly 5-day moving average with no rotation. It's a market you don't want to fade. And this is why I like going to you to see what's happening in the macro backdrop. As today we're focusing on the commodities markets, specifically talking about gold right now, and to say that there's not a lot of headwinds for gold. I mean, I totally agree, because you have a Fed that's talking dovish. They may not cut rates, but if they do cut rates, what you're saying is that this may accelerate it. You also have the geopolitical headwinds or tailwinds, however you want to look at it. Then you also have, like you said, everybody's really been short gold. And I was looking at a lot of the COT data going back, and that a lot of times happens in a higher interest rate environment, right? Because people are going to be looking to short gold, typically, because we talked about, because that opposite correlation. So it's an interesting time. And I think for day traders, I think, one of those things is when you're, maybe if you're new to gold, they also have micro golds. It's one of those things where I don't look at too much. Once I have this idea that, look, it's going higher, we have the macro and we have range expansion on a daily, I just try to find simple day trading strategies and only look long. And like Tracy said, there's going to be some times where you're going to have mean reversion. It's going to happen. Of course, we don't know. You're never going to perfectly time when they're going to rotate. But to me, this is just one of those one-dimensional higher moves right now that's also been ignored for so long. I think that it's been that trade that's been not really getting the love that I think a lot of people thought it would get. Trace, how about how many years ago? For years, you and I have been talking with a lot of people about how gold eventually is going to get its leg. It's a hedge, not just against inflation, but a hedge against central banks. And now when that trade finally does start to happen, you get so many people that actually want to fade it because they don't really.
Because everybody's used to shorting gold, right? It's really gone nowhere for a while. It was kind of range bound, and you kind of knew the parameters of those ranges, even if you were a swing trader. You could trade it very easily, up and down, because it really didn't go anywhere. But, it was consolidating for years, right?
Yeah.
So essentially, it was going to break one way or the other.
No doubt. I actually have Peter Ship coming on my podcast later this month. I'd be curious to see what he says about gold. That should be interesting, kind of a plug going towards the end of the month here. But silver now, Shai, very different market than gold. I know that we talk about them in a lot of similar situations, but they are very different. There's so many more use cases for silver. There's obviously an abundance, a lot more out of it compared to gold. I think they're very different. But we do pair them together when we look at metals. Where does silver play a role in this macro environment right now?
Well, I think the interesting thing, and I love silver. I love the silver trade right now. I've been writing about it for a couple months now. So what I like about it is it's not only considered a store of value, which would be kind of a precious metal, but it's also industrial use, right? So 45% of silver usage is actually in industrials. And so what we're really looking at is, and I've been waiting for this trade to kind of move, is that we're in this, green revolution, whether we like it or not, right? There's this huge push for this. So if we look at, EVs, for example, right? Every electrical component uses silver. And if you think about your ICE vehicles, there's a lot of silver in your ICE vehicle because cars have gotten more and more electrified, right? Everything's becoming more and more electrified. Now, if you look at an EV, take that electrification and multiply it times 100, because it's all electric, right? And so there's a lot more silver in those automobiles, not to mention a huge amount of silver that's in solar panels, and not to mention the huge amount of silver that's also in wind turbines, because it's a great electric conducer. And so if we're, planning on this huge build out, well, you're going to need a lot of silver, not to mention there's other markets as well, such as healthcare. Healthcare is a big user of silver too, but that demands remain pretty steady compared to the demand in the green markets. And then if we look at production, silver really has had the same problem that the oil sector has had that we've talked about before, is lack of capex. So what we have seen is no mining, increased demand. And in fact, the last 3 years, the supply deficit that we have is greater than the last 11 years of supply surplus. And this market is supposed to be in deficit even further for 2024. And so that's your fundamental case for the silver market.
And so in this environment, we talked about the potential headwinds for gold. We talked about also what could accelerate it. Same question for silver.
I think the exact same thing. I think, unless you saw some sort of backtracking on this green movement, that's only going to serve as a catalyst to move forward. Again, silver market is very, very squirrely, as you know. So I, do expect, this market to remain volatile as it has always been. But over the long term, all I see is the upside for this market right now.
Interesting. So we have a macro backdrop that's similar in gold that could fuel this rally. We also have the use case. And then we go to the technical side of it. If we go to the charts here, I pulled up a weekly because we have to get perspective as day traders when we look at these markets. And I think a lot of people are going to be new to trading silver if they've ever even traded it, right? We're seeing a lot of people talk about it. Even our friend Merritt Black, people like that, he's out there, he's talking about how's his favorite market to day trade right now. And when I look at this, I look at it and see, really, we've been in a consolidation for years. I mean, it's another one of those markets where, everyone keeps saying it's going to get going, and it is actually starting to, if you were looking at this from a stock perspective, I think a lot of people would say, oh, get ready for, a potential massive breakout, and what could this do? And I go to my weekly chart and I look, you have range expansion on the Bollinger Bands, as Bollinger Bands are starting to point outward. We've got this $28 to even $29+ price, where I think that's the recent highs over the last couple of years. If it pushes through there, what Tracy's talking about is a backdrop of what's happening on the macro side of things. I think it becomes very interesting for traders. You've also got micros for this product. And I go back to this, everybody, when you're trading these commodities or metals and you're trading a newer product, go to the micros and also understand what's happening in the macro side, because unlike the S&P, the NASDAQ, and the Russell, they could really be day traded, I think, and almost put a blind eye up to what's happening in the macro side. I mean, that could always be a debate between styles and strategies. But I do think when you're looking at metals or any sort of commodity, it's important to know the backdrop. That's why I'm glad we got Shai here today to understand what's pushing this on a much bigger level, because our short-term day strategies aren't going to be as relevant when you have that big macro backdrop alongside with technicals. And as you and I both know, Shai, anytime you have a macros working with technicals, that's when you get the biggest moves in any market. And I'll go to copper next.
And we're just really quick, there's a giant wedge from 2020, and then there's a smaller wedge within the wedge that we're just breaking out of now, from
2021-ish,
2023. Yeah.
So
we've got like a wedge within a wedge right now, and then we're just starting to break out.
Yeah. So what we'll do is maybe maybe if you post that on Twitter later, I actually want to make sure everybody knows too what you're doing. We'll talk about that at the end on all your commodity posts and what you're doing with a couple of friends of ours, Andy Constant at Damp Spring and Jimmy Jude, which is, you've done an absolutely fantastic job with that. I want to go to copper, and this is one of these markets that I think that most people have probably never traded, may never trade, but it's also getting a lot of talk right now. And as I pull this up here on the daily, you can see once again, it looks somewhat similar to what we've seen in silver, where we're pushing back. It hasn't quite making a high like gold has, but everyone talks about Dr. Copper. Shai, why is copper important for us to watch? And what is the macro backdrop right now on copper?
Well, the macro backdrop is very similar to silver right now because of all the use case in the green movement. Once again, it kind of was struggling. I mean, fundamentals are all there. Again, lack of capex. We had some mine closures in a mine closure in Panama. You're having problems with production in Chile right now, and you have smelters in China quitting production. So there's a lot of near-term production problems with copper right now that's giving it a boost, as well as the use case. Now, what's interesting is, we kind of did nothing. We've kind of been sideways, again, same market, kind of been sideways for a couple of years. And that was, Dr. Copper's generally looked at as, what's going on in the economy, particularly China, right? So China has been kind of an iffy, right? The economy hasn't really taken off as we thought as soon as they opened from COVID. And so we had a lot of the base and industrial metals kind of languishing, ready to hear some signs of some good news in China, and it just wasn't coming. You had the property sector implosion, which obviously affects the metals markets, particularly copper. And, things just didn't look like they were getting better anytime soon. But now we're just starting to see some good numbers come out of China. We have PMI that was finally over 50 for the first time in, over a year. So that means, what that means is they're in expansion territory. Above 50 is expansion, below 50 is contraction in the economy and the manufacturing sector. So we're seeing a little bit of good news. So that's helping copper as well right now.
Once again, you have macro alongside with technicals. Anytime we look at commodities, it's so important to understand what are the main drivers of it. And Shai, thanks for laying that out. And when you look at it here, we're in range expansion. It actually looks very similar. If I even go back to the gold chart, I mean, it looks very similar, right? And you see how these markets right now really have a lot of upward momentum. And, you know, we're going to get to oil in a second because we know that a lot of people here are tuning in what you're going to think about in oil. But I just want to kind of summarize what we're seeing here in these precious metals markets right now, Shai. I mean, I'm curious, when you see this type of macro backdrop and what you're seeing happening in copper, silver, and gold, at some point, do we think this is going to have any impact on equities? Is there something else that maybe is happening behind the scenes that we, as a lot of us are trading S&P and NASDAQ, and Russell, should be taking note of when you see moves like this in the metals?
Well, absolutely. And we're seeing a rally across the entire commodity sector, which says to me that people are turning to hard assets as well. And so, again, that goes back to maybe everything isn't as great as the Fed says about the economy right now, because commodity markets, hard assets, and we're even seeing an uptick in, value. I mean, it was tech rally for the entire year last year. And now we're kind of seeing that broadening out into the value trade. So we're seeing, value catch a bid. We're seeing commodities catch a bid. So to me, that says the market is saying, I don't know if everything is exactly as great as they say they are. I mean, the numbers look fine. Everything looks fine. But, sometimes the markets sniff out things quicker than the numbers come out. And you know that.
Yeah, absolutely. And anytime I look at higher highs, whether it's in silver, copper, or gold, I always look at the velocity of it. That to me is always the most important aspect of it, because you've seen gold inch out a new high, come back in, silver, copper. But if these moves start having velocity to the upside, that changes the dynamic in the entire marketplace, and it changes the market environment. And it's something that we have to keep an eye on. Same thing I mentioned for silver and gold. If you're trading this copper markets, make sure you understand the macro backdrop, understand when the numbers are coming out, understand the different months that are expirations and all of that. So when you're pulling them up on your NinjaTrader, you're aware of the different expirations and rollovers, because they are different. They're more frequent than you're going to see in equity indexes. Last but not least, Shai, we're going to go to oil. And look at inflation's coming back in, right, Shai? I mean, all these charts are telling us that. And here we are with oil.
But I've been talking about this since last year. I said I've been talking about this, and we've talked about this before, where I said, I just don't think that it's over yet. And the Fed seems to be, job is done. Well, let's see.
So what makes oil, look at it, we could go back to when we saw that big spike, with Ukraine and Russia. It came off, it's starting to come back up. Oil's back in play, seeing a lot of day traders move from equity indexes into oil. Cleaner looks, I've been hearing, grinding higher. You see range expansion. Take us through the numbers. What's happening behind the scenes in oil? Is this rally being supported by data or no?
Well, I think it's yes. If we look at the fundamentals of the market is starting to get really tight because of the OPEC cuts, which they have rolled over for another quarter. And then we also have Russian refineries that have gotten droned. So that's affecting the products market, which in turn affects the crude market altogether, because we've seen cracks explode, and this is bringing up the crude market. Actually, this is actually being led by products, to be honest, right now. so we've got, Russian product off the market, believe it or not. People, I know we have sanctions, but people are still buying Russian crude and Russian products globally, even though it's not the West. So you have that product, you have product off the market because of the refinery accidents there. And then you have, Russia said that they're going to lower oil exports because they're going to comply with OPEC. I think it's more has to do with, I think there's more damage to those refineries than they're telling us, but that's a whole nother story. But fundamentally, the market's getting tight. We've seen a pullback in US production. I mean, US production, we got a revision down.
I think we lost Tracy just for a quick second. There she goes.
Am I
You said
back?
a revision down, or maybe that was just me.
So we had revisions downward revisions in US production for November and December when the monthlies came out. And then another downward revision in the monthly by a large amount in January. And so, we may have seen for a while 2023 as being the high in US shale production. And so, because we've had significant revisions down for the last 3 months, I have to say the monthly reports lag by 2 months. So it's lagging data, but it's better data than the weeklies, which is just kind of a guesstimate. So that's it. So we're seeing, US shale production come down. We have Russian products off the market. We have OPEC not budging their stance. So the market's getting tighter.
I know it's an election year, and I'm curious, is there anything that you could foresee the government potentially to do to potentially take oil prices down?
Well,
I think we lost her again.
you hear me now?
Now I have you.
Now you have me. It's weird. Okay. Well, there's not much left to dump in the SPR, right?
That's what I was asking. Yeah.
So that's a problem. They did just cancel the last refill order, obviously. So I would expect them not to refill this anymore for the rest of the year, which I've been saying forever was going to happen. But yeah, so really there's not that much they can really do right now because they kind of used all their tools in their toolbox, right?
Yeah.
And so, outside of going to beg people for more production, but
Yeah. And so that's interesting. So when you look at, just to go over everything today, gold, silver, copper, crude oil, commodities across the board, a lot of tailwinds. I mean, you don't see a lot of headwinds. It doesn't seem like there's much to come in and stop this.
And, and the agricultural markets, aside from meats are up huge this year. But if you look at the grain markets are down comparatively speaking to the rest of commodity sector performance. But now we're seeing an uptick in grains too. And so, I think this is going to be a huge headwind for the Fed and for inflation, even though they don't count energy as inflation, but energy is a major input to everything, right? And so those costs get passed on to the consumer, obviously. And so I think this is going to be, I think this is going to be a headwind.
Interesting. Yeah. So, Shai, thank you so much. I want to make sure everybody knows to follow Shai on Twitter. She's one of the best when it comes to really macro everything, but really the best when it comes to commodities and understanding what's happening behind the scenes, as you could tell, in metals and also in oil and all the ag space. Also, Shai, tell everybody where they could find more about what you're doing with your podcast, your newsletter, everything that you've got going on. So
yes, I've got at my Mike Drop Markets podcast, which is at Mike Drop Markets. And I don't know, everybody knows every Wednesday I have a spaces from 11 a.m. to 12 p.m. It covers a wide variety of subjects every week. So tune into that. It's right on X. And then we also have a separate podcast, which is on YouTube, and you can find what we have, the one-on-one hour interviews that are video on YouTube on our channel, My Drop Markets YouTube channel. I also have a project with Andy Constant and Jimmy Jude. And so you can find I'm helping, it's a collaboration with them, and I'm just covering commodity markets. And you can find that at dampspring.com. And then, of course, you can go to hilltowerresourceadvisors.com to find my stuff and my analyst stuff.
Shai's a workaholic, everybody. I've known her for years. She's one of the hardest working people in this space. Definitely recommend going and following and finding everything that Shai's got going on. She's also in my free Discord, which is great to hear from Shai when she's got time to come in and chime in commodities. And I just want to say one thing, Tommy. I know before we bring you in here, I want to show everybody this. We talked a lot about commodities today. Starting Sunday, May 12th, CME Group's going to have actually a commodities challenge where you're going to be able to trade these markets that we discussed today. I think it's extremely important for traders before you go and live trade commodities. Understand the macro backdrop. Go to Shy Girl, her stuff, everything that's going on there. Understand the tick increments. Know that there's micros. Understand expirations, data points that are coming out, because they are different than what you're traditionally trading. If you're coming from S&P, NASDAQ, Forex, wherever you're coming from, they're just different beasts. And I think it's important to do your homework before you step into these markets. This CME Group Challenge, you sign up. It's free to sign up. First place is $2,500. Second place is $1,750. Third place is $1,250. And they're going to have leaderboards, all sorts of fun stuff. And you can find that. There'll be a link in my YouTube description, and I'll also post that on X.
Thank you for that, Shy Girl, Tracy, for coming, being on NinjaTrader Live. We'd love to have you back on. Anthony, great show as usual. Yeah, I was muted because I was watching, and it was a great show. Really interesting.
All of the symbols, trading ideas, and live trading are for demonstrational purposes and are not recommendations or trading advice. Past performance may not be indicative of future results. All of the information and opinions expressed by third-party guests are their own and are not necessarily those of NinjaTrader LLC. Trading futures involve substantial risk and may not be suitable for everyone, and trading futures can result in losses greater than the initial required margin. Traders should only trade futures with risk capital. Risk capital is money that you can afford to lose without jeopardizing your financial security or current lifestyle. You can find additional disclosure information on the NinjaTrader website.